Greetings, ladies and gentlemen. Welcome. I'm going to give you some good news today. I know you need it. I've been looking for it myself, and I think I might have found it. I think this video should probably help you feel quite a bit better about what's going on in crypto and the recent crashes. So we're going to dive into a bunch of stuff. We've got a little bit of Cardano news, Cardano price prediction. You're gonna find interesting Bitcoin price prediction. And some news, JP Morgan stuff, and there's a Cardano scam going around in people's inboxes that I'm going to show you. So let's go ahead and dive into this video and see what we got. So basically, one of the things I've been doing recently is, I keep getting all these questions from people like, when's the market going to peak? When are we going to peak? What's happening, right? Because there's this idea that we've already had the peak. The institutional spot Bitcoin ETFs have created they just threw such a wrench into the overall crypto market, as well as technical analysis and expectations and perceptions and everything else. Here's the thing. I think when BlackRock and basically all of these spot ETFs were approved and they started their onboarding, it's 12 o'clock in the afternoon. I woke up at 7 a.m. today because I didn't do anything yesterday. Obviously, I didn't do a video, and I woke up at 7 a.m. today. Like, I am going to be productive. I'm working on a machine learning indicator, which is one of the reasons why I found some of the stuff I found. I'm going to show you today. I've been working on a bunch of stuff. Had a call this morning about Soblox, just a bunch of stuff. Rumor has it, Charles Hoskinson is actually trying to figure out how to allow like North Carolina hurricane victims use his Black Hawk helicopter for rescue because of the state that we're in and what's going on. So I don't know if that's coming to fruition or not, but I know he's trying. So that's a cool little note for you guys. A little thing that I'm sure none of you know. So anyway, I've been trying to figure out what's going to happen, and I was looking at previous price history like I always do and many others, and I was kind of measuring things out with the RSI peaks as well as the peak market price all-time highs in each cycle. And, back in the 2020 cycle when we had the COVID announcement and we got that dip, it was temporary, but I feel like there's a part of that might have thrown a wrench into kind of how the market breaks up, and we ended up in a two-peak cycle, even though I don't necessarily think that's super relevant, because the way I called that two-peak cycle was by comparing it to the NASDAQ charts of 2007, and it lined up pretty identically. So I don't know how much COVID played a role into that. However, when I look at what's going on right now, the thing is I have to wonder how much of what is happening in the market is happening because of like the world or the Middle East or any of that, compared to just, these ETFs. Like, I've been seeing a lot of things about how BlackRock's ETF, they're able to basically buy over the counter. Just because it's a spot ETF does not mean they're running out to like Binance or Coinbase and buying these tokens. They could be, but I don't necessarily think they are. But if they believed that the next, let's just assume for a minute BlackRock knows a hell of a lot more about what's going on macroeconomically and throughout the world than any of us do. It would potentially make sense that, Larry Fink is out there talking all the time about how, Bitcoin is going to become this new store of value and everything's going to be tokenized, and we're going to have tokenized assets and AI and all this other stuff. And he's making all these bold claims, yet the price continues going lower as they are basically accumulating, right? And I'm thinking, if they were accumulating over the counter, but they were distributing or liquidating on exchanges, they could effectively be lowering the price, because obviously they're getting a lot more inflows than they are outflow, but the outflow is enough to suppress the price, especially if they're all doing something similar temporarily. Because if they're trying to get into an asset that they believe is ultimately going to take over and make huge splashes and achieve all these new highs and do all of these big things, it makes sense for them to buy over the counter, not driving the price up on themselves, while they're potentially keeping the price at bay to a certain extent until things start changing economically, at which point, interest rates are lower. This is happening. That's all this stuff is pointing to Bitcoin and crypto assets like Cardano and all these other things. So ultimately, they're kind of making their own market. is what I think could potentially be happening until such time that things start turning around, the overall sentiment grows, and retail starts driving these factors more than they could effectively withstand through whatever current practices. There's a lot of FUD going on right now. There's a lot of doubt, fear, uncertainty, right? So it's easier to kind of push the market down and keep it suppressed, moving sideways while they're continuing to accumulate for their investors. At the same time, they're effectively benefiting from a lot of these different things going on in the world. So we'll leave that at that. That's just my theory right now. But effectively, you know, if any time I work this out, I'm seeing basically a peak of October 2025. Now, this is just another way that I've worked this out. You know, back here, just from the crossover from the RSI, I just measured the time and the price increase from this point to the first peak. That alone was 600%. If I just cut that in half and I use the same time frames, we're basically looking at somewhere around a $248,000 Bitcoin. I've worked this up in so many different ways, and I often fall on the same patterns. And you kind of have to get rid of the noise in between. But this is on a 2-week. These are bi-weekly or 2 weekly candles. So every one of these candles is 2 weeks in the time frame. And technically speaking, right now, we're still in the green. I mean, we're trading at 60 grand right now, down from 65. It doesn't feel good, but I'm going to show you some other stuff. This is a cup and handle on a weekly chart. Now, the one thing that we know about charting is that crypto especially is more effective. Like if you're trying to, you know, establish an analysis of what's happening in the crypto market, you have to zoom out, because the shorter the time frame, the less predictable and the less reliable the metrics, the less reliable the analysis is. So if I'm trying to get a grander scale as to what I'm looking at, I zoom out, I go to the week. Sometimes I'll even look at the monthly. And this is a perfect cup and handle with a target of around $125,000 Bitcoin. So it's very likely that once we break out of this to the upside, the next target's going to be somewhere over 6 figures. The question is, when do we hit that? How long will that take? I'm guessing it's going to happen sometime this year. And then at that point, we could get a pullback. Let's just see, because in previous cycles, having the price rally significantly and then get like a 40% pullback over a couple weeks is very common. I think it happens 3 or 4 times generally in a bull run. I'm curious what this would mean. So if we got a 106% pump to the upside, that alone would be a third. So if we were going to get 3 major pumps in Bitcoin's price, but then we came back down from this point 40%, let's just say. Okay, that's, wow, interesting how that plays out. Let's just say 30%. That looks better. Well, even if we were to go to 40, but then if we got another pump to the upside, let's say it was another 100%. 100% from there would be 150,000. We get another 40% pullback from here. Where does that take us? And these would ultimately all play out over, 6 months. Okay. But if we got a third pump out of that, I'm curious where that would take us. 100%. We got to make this bigger. Oh yeah. And we're in November. That makes a lot of sense. So let's just say we got another 100% pump and bingo. So that would take us to $180,000. And it's funny, y'all, you can't even see it. Shoot. Well, just the way I drew these, I fell on October 19th of 2020. Ooh, that was October 2026. It's not going to take that long. But ultimately, this could play out over the course of, 6 months or so. So that's my Bitcoin price prediction. Technically, it's going to be over 6 figures by the time this peaks. We're in a very solid cup and handle on a weekly. We're just waiting for this to break through and play out. We can even go down further. Let's go down to a this here on a short-term time frame on 2 day candles, we could be looking, this is saying that we could get down to like 40,000, right? But that's on a 2-day that's on 2-day candles. We got another one here. We've got another symbol or a pattern here that was projecting a top of, $126,000. We obviously aren't seeing that. So these can be like, these cannot follow through. And the shorter the time frame that you're looking at, these patterns are less likely to happen. But like here, we got a double top situation with the target all the way down here around the $47,000 mark. We could get that. We saw the price dip. We saw the price wick all the way down here around 49,000. Is that it? Or are we going to continue from there and close below this point before we get a reversal? That's the question. But in the grand scale, in the grand scheme of things, everything is I think it's all going to be fine. Now, this is Cardano. So when you're talking about a Cardano price prediction, everything I see, any time frame, all of this stuff, it all looks like it's all being set up for some very significant pumps in the not so distant future. You've got this green pattern here. I don't even remember what it's called. I'm using an indicator right now that's finding these patterns out through the system. We've got a target here for the most recent pattern that's discovered at around $1.40. We've got another target all the way over here around $2. Then we've got this blue. So if you're looking at the grand scale here, this giant pattern here that's all in blue. So you got the blue pattern, then you got this red pattern in between, and then all the way over here you've got this green one. All three of these are forming up with some pretty significant new marks, with the blue, the largest of these patterns, forming up a target of around $3.44. This is on a weekly candle, folks. This is on a weekly candle. So we're obviously setting things up. The one thing that I will say, I do believe that to some extent there is some form of not necessarily price manipulation, but price suppression in Cardano. And I don't know where it's coming from, but if I look at like liquidity and what's going on, it's just the way the price moves, and I compare it to others, I feel like there are people setting up these suppression bars, this bearish liquidity at price points to keep Cardano bouncing and making it difficult to blow through until retail sentiment really changes, or people are basically, they're utilizing the position Cardano's in to profit much more substantially than they may have it with like Bitcoin gains. So we're going to see us blow through these. We just did, like recently, we just had a pump and Cardano's price blew through the bearish liquidity. The problem is that these red bars keep the price from moving as quickly and effectively as like a warm knife through butter. So if this were all to transition into more bullish liquidity, the price would move that much easier through these charts, and we don't see that with Cardano, at least right now. Once we break out of certain levels, then we'll start to see that. And once the sentiment really starts to change, we'll start to see that even more. So I'm not overly concerned, because we've seen this every single market. Cardano just basically does the same thing, because this isn't manipulated. It's not manipulated in Cardano's favor like we see with some other projects. It doesn't have the VCs. It doesn't have these large capital groups that are basically playing with the market. If anything, Cardano's a big competitor for a lot of this stuff. And so they're doing the same thing, but in reverse, to benefit themselves at the expense of other projects such as Cardano, which we all know everybody's afraid of Cardano. If you're holding something that's basically like a bad project, that's basically built on smoke and mirrors, whatever that may be. There's more than one out there. We know that Cardano is a threat to a lot of that stuff. So we're going to see how it plays out. But ultimately, we've got a lot of bullish sentiment in the long term. And so I'm just waiting to see that. A new report from the Crypto Information Sharing and Analysis Center reveals that cash is far more prevalent than cryptocurrency and illegal activities worldwide. That's all I can really say. These narratives that some of these politicians put out, basically trying to say that crypto is used for all these illegal activities. Yeah, it's used for a lot of hacking. And definitely a lot of scammy stuff, but I don't think any cartels are showing up with a bag full of Bitcoin when they're basically making their business deals. I just don't think that's the case. Everybody knows that all of these things are traceable and trackable, right? And yeah, there are methods for being able to evade some of that stuff, to escape some of that. But I think even some of those tools may not pose as opaque a wall into the transaction flow as we might be, that we might think. A new Cardano scam. We don't see this often on Cardano, but fake token upgrade emails are targeting Cardano holders. Avoid falling for fake Cardano upgrade scams post-Chang hard fork. Scammers are falsely claiming that ADA migration is alive. This is not the case. If you get one of these emails, don't click anything, don't touch anything, just delete it. It's bogus. Cardano's recent hard fork set the foundation for decentralized governance. Scammers claim a token migration is in progress. A Cardano mailing list has been leaked. So, yeah, I mean, don't buy it. It's all bogus. If you're not seeing it from me, or Charles or somebody reputable in the space, it's not real. So just ignore it. JP Morgan says geopolitical risk could drive investors to gold and Bitcoin. Yeah, obviously that's the case. Here's the thing that I want to point out, though. There was a point that I was going to buy, that I was going to stock up a bit on gold. And I ended up not doing it. And the reason for that is, well, I'm already in crypto. I know Bitcoin. I know how to use Bitcoin. I know how to use cryptocurrencies and wallets and all of that stuff. So there wasn't a big barrier of entry for me. But what there was a barrier for entry of is gold, because I went to a couple different places and I watched a lot of videos. I read a lot of articles about it too. The thing about gold is, you can buy gold at $1,000 an ounce and it can go up to $1,500 an ounce. But then when you try to sell it, you're taking a 20 to 30% hit from the broker that's trying to buy it so that he can retail it on his store shelves, just like anything else. It's like gold. The world of gold buying and selling to me felt like a swap meet. It felt very much like like a pawnbroker. You know, it's like, well, it's worth 2,000. Like you watch the Pawn Stars. This is worth $20,000. And like, well, what do you want for it? Well, I want $20,000. I'll give you $5,000. Like, that's the gold market. So it's not really as beneficial as they make it sound. If you're trying to buy it and accumulate it and you want to hold it for 10 years so that the potential gains of the gold's value is so high that taking that broker hit doesn't affect you as much. But if you're trying to I'm going to buy some for a year and see what happens, or I'm going to I'd rather just have Bitcoin personally. Now, if all the power in the world went out and the internet was gone, then obviously your Bitcoin's probably not going to help you very much. You'd probably want to be able to shave off some gold to buy a loaf of bread or something. But, how many people are carrying around bars of gold? This stuff is heavy. So that's it for today. I just wanted to kind of give you guys an update on what was going on, what I think is happening. I think in the grand scale, in the grand scheme of things, everything's going to work out fine. No, I do not believe we've peaked. No, I do not believe that we're in a bear market already. I think that the influx of the initial ETFs just threw a lot of the metrics off for people. And now everybody are running around confused because the way that we used to look at everything has ultimately been changed. But the same thing happened the opposite way during COVID. That market drop where everybody freaked out because of the announcement of the pandemic, that was basically the opposite. But we corrected over time and then we continued our way up. I believe we're in a similar situation. It's just this time the market saw a new all-time high before the halving, which has never happened before. And we're going to average it. We're going to average out. We're seeing a lot of that happen now, and the systems are coming into play. We're going to get our pumps. We're going to get our parabolic run at some point. I just don't think we're going to see that parabolic run for a little while later, but I am expecting to see some big turnaround and potentially a new all-time high within the next 90 days. But I would like to see a pretty solid pump by the end of this month. My birthday's next month. I would love to have $100,000 Bitcoin and even a 50-cent ADA by my birthday, before we start going really parabolic. So, we'll see what happens, but I do think a lot is going to start happening sooner than later. And I think especially after this election, once we have some clarity on what's going on, I'm seeing the talk about, Kamala and them, they're starting to change their tune about crypto. And I'm like, you know what? I just don't buy any of it. Like they're trying to create the separation between Biden and Kamala and all that. And it's like, listen, I would love to believe any of it, but I just don't. I'm sorry. I'm just not a fool, man. I mean, the proof is in the pudding of what we've seen over the recent years. We've seen the action. We've seen the policies. We've seen the votes. We know where they stand. They can try and backpedal and say, oh, but we're different. And it's like, to me, I feel like when a man hits his wife, you know what I mean? And then he's like, I'm so sorry, baby. It'll never happen again. And then, she takes him back and he does it again. And then, within a year, you see her on the news. You know what I'm saying? I just feel like that's kind of where... That's kind of where we're at. I feel not good, and I just don't trust the message. I don't think anybody with any real clear thought is buying any of it. And so as much as I'd love to believe otherwise, I would love to think, you know what, it really doesn't matter who gets in. Everything's going to start really picking up and moving, and we're all going to benefit, and we're going to have happier lives. I just don't buy it. I think that one side has proven in multiple ways where they stand on it. And I mean, that both sides have proven where they stand on it, basically. One is just not having to change their narrative to benefit voters and to try and get more voters. The other one is. What have we learned through history? I don't buy it. So anyway, but to each their own. If you believe it, well, then, I hope it works out for you. But until next time, crow your coins. Thanks for joining me, and I'll see you soon.